On the day when the Nifty and the Sensex have hit record highs, welcome to Markets Tomorrow. I'm Neeraj Shah.
Hi everyone, welcome to the show. I'm Avan Dabash, and of course we have an expert lineup today to talk about the overall momentum of the market and which stocks and sectors you should be looking at. Gautam Chowcharia, Head of India Research at UBS, joins in. We've got Sandeep Wagle, Founder and Managing Director at Apta Technical Advisory Services, and Neeraj Diwan, Director at Quantum Securities. Neeraj, I'm going to start off with you. Now, if we sort of compare this kind of a rally with record highs to the one that we saw in 2008, that was led by some of the defensives like FMCG and pharma, whereas now you had some of the banking and rate-sensitive stocks taking leadership. Where do we go from here, and what do you make of this comparison?
Yeah, good evening. Yeah, definitely the rally which we're seeing now is being led by banking sector names, capital good. Actually, from the last 5 years since we saw the all-time high, these stocks are the ones which are still available at a discount, and the other stocks have become expensive. So some churning will definitely happen, and some portfolio relining is definitely going to happen when people are getting a sense that maybe there's a change of government here, and maybe things are going to stabilize, and ultimately our fiscal deficit and our situation is going to improve slowly. So I think with the sense and the feeling that you're going to have a stable government in the next election, this shift is happening, and that is what is fueling the rally, which today also saw a good upside. I also feel that the rally can continue, but definitely it will not be without ups and downs. I think choppiness is still going to be there in the market. You can't forget things like, of course, our macros are there. Besides our macros, things like globally, QE talk can come back and haunt us again. And then there's going to be the RBI policy. Then you have the inflation, which is still at a high level. So things will keep on, haunting us for some more time. We have choppiness in the market. But one thing is clear, that we should identify the stocks, the cyclicals, the financials, and the capital goods stocks, where I feel these are the ones going to be real leaders in the next rally. If someone going to invest today, or the dips that can follow in the days ahead for 1 year to 18 months, these are the stocks that will give you more return than maybe the FMCGs or the pharma had given you till now. So some portfolio alignment is required to be done, and if someone is already invested, I think it's better to stay invested. If you are not invested, then maybe wait for the opportunities. You will get opportunities now also.
Gautam, where do you see the markets from now up until 2014, when the general elections outcome would be declared?
Ceiling will definitely go higher because India, even over the last 3-4 years, we talk about all-time high and all that, but earnings have been growing every year. So if the all-time high reached after 5 years, it's a clear case of derating to some extent. So ceiling will go up higher because even last 2 years earnings have been growing. In terms of what factors will drive market, and the market will be range bound, so I still don't see the market going out of range in terms of re-rating back to 16 times, 18 times PE multiples in a hurry. That scenario still looks a bit premature. We need to see more credible policy measures, more credible economic data points, rather than just a cyclical upswing. Having said that, keeping in mind the tapering, we have never been really worried around tapering causing any major damage to India in terms of a currency crisis or anything. But yes, that still remains a factor. But in India's case specifically, I think the local political noise will play the bigger role over the next few months versus tapering in terms of market direction. And when we say political noise, again, a part of the election outcome which we saw yesterday was building up a more positive sentiment towards Modi-led BJP. But we have to remember that the political arithmetic still remains challenging. And the third front, or the various constituents of the non-Congress, non-BJP parties, that still remains a dominant force. So whether it will be a Modi-led BJP or it will be a third front kind of dispensation can have different outcomes in the market, because if it's a third front dispensation, that's not necessarily a positive scenario for markets. So it's not an obvious slam dunk in that sense. So absolute Nifty levels at which you build your risk positions, at which you see your risk reward, that remains critical. And we have been saying that's more sub 6,000 levels in terms of building positive risk reward positions, possibly even 57, 5800 levels. So at 6400, at 6500 levels to build or add new positions, to us the risk reward is not necessarily attractive from a 6 to 12 month perspective. But we are not in the believers in the camp that market goes down sharply because of tapering or other issues from here on.
Sandeep, from these record highs, is there more to build up? Is there a structural change that you're seeing in the Nifty?
Absolutely, Avan. I see a very clear structural change. The range has now shifted from probably 6,000 to 6,300, which was earlier, to 6,300 to 6,500, or maybe 6,250 to 6,500, 550, that 300.5% range. So nearer, as a trader, nearer 6320, 6300, I would look at a buying opportunity with a stop loss of a 6230. Take a 1% risk as a trader. I am not trying to say that we will go to 65.50 in the next few days, but yes, in the next few weeks or so, quite possible. And I don't see 62.20, 62.30 being broken, so that is a very strong support. So I'm quite comfortable being stock specific. Yes, we have had a strong opening, almost 180, 200 points, and then we have corrected 70, 80 points. So I won't term this as weakness at all. I would rather buy into this another 30, 40 points lower on the Nifty, stock specific, and I would play for a 7 at 10% trading upside in the immediate few weeks, or possibly a little more than that.
Now, Sandeep, just wanted to talk particularly about ONGC and the kind of moves that you're expected to see on the stock price come tomorrow.
Well, I'm quite positive. It has broken that strong resistance of 300, which it was not clearing for the past so many days or weeks, I would say. And I would buy it with and the volumes have also been good. I would buy it with a stop loss a little below 300, say 298 or so as a trade, and talk of a 315, 318. So a very clear 3.5% trading upside is what I would talk of immediately in the next 2 or 3 trading sessions.
That's the word on ONGC. You know, a set of stocks, Neeraj, that did very well in today's session were the cement names. So while we've been talking about cap goods, while we're talking about how banking has done very well, suddenly out of the blue, you had the Ambujas, ACCs of the world, even the smaller ones shooting up in trade. And a lot of people are bringing forth this argument that the companies are available at the bottom of the cycle, they are available at trough valuations, and therefore, if you have a 1 year, 1.5 year holding period, then these stocks could actually give good returns. Is that a thought worth subscribing to?
Yeah, I think so, but then you need to be very stock specific there. I think as a sector, definitely, you've seen a lean period, you saw consolidation in the stocks also, you saw them being sideways for some time. So I think, again, at this level, you can make a case of a good return in the next 1 year to 18 months. But then one needs to be stock specific. I think one stock which I feel can be a good bet out of this is the Grasin, which I feel has a good potential at the current price also. So one can be stock specific and lay the bets on cement also, which can give a good return over 1 year.
Sandeep, the Bank Nifty no doubt was a strong pillar of strength today. Lots of those mid-cap banking names plus the large caps really contributed to the rally. What is it that you like within this space?
Well, UCO Bank is the one we had recommended on Friday. We have added a Union Bank to that. Bank Nifty did correct in the last 1 hour or so, and I was expecting that correction, but now it becomes attractive bet nearer 12,000 levels. If you ask for Bank Nifty levels, I would talk of a buy in the range of 12,000 to 11,900, maybe 100 points lower stop loss, and play for a 12,500, 12,600 upside.
Yeah, and so while I asked you about companies which haven't done very well of late, like cement, and have bounced up, but there is a pocket called banking. And Neeraj, that's my question to you. A lot of people have been arguing for the past 6 months that PSU banks are available sub-book or half-book. Private banks are much cheaper than what they used to be. But they are no longer that cheap. They have rallied when the market has gone up from 5,200 to all the way to 6,400. What do you do with banks now selectively?
Yes, definitely. See, we have also been recommending banking, private sector banking for that matter, whenever I have come on the show also. And ICICI Bank has been the top pick. And now you saw that the last couple of weeks, ICICI Bank is the leader in the rally, which has really done very well. Yeah, though I agree with you that the valuation is not as cheap as they were earlier, but then there are very few banks which are available at a premium valuation, but then they are have a good momentum. In the last 7-8 quarters have been decent for them. Even ICICI Bank is one example in that. They have been improving their book and they have been giving good set of results over so many quarters. So you see this rally which has already happened. Maybe I'll not advise someone to jump and go after ICICI Bank kind of a stock now. But then, on a correction, these are the stocks which again will be bought. There will be people who will be ready to buy them in any correction. So this can be, you can hold on to stocks like ICICI Bank, or for that matter, Axis Bank. Though they may not be that cheap, but then, that's what happened with stocks like the IT sector or FMCG sector. The expensive stocks kept on becoming more expensive. So where there's performance, where their results have been decent, then people will chase them. So there will be, a few stocks where a lot of people will be chasing them. So ICICI Bank can be one example from that lot. And other will be the PSU basket. There, even after the run-up or whatever small run-up that has happened, there you still have value. But there again, one has to be stock specific. In the last quarter also, some banks gave a view that, they might have peaked out as far as NPA cycle is concerned. So, you have to really identify in the public sector bank where you want to put your money in, because I feel that even at the current levels, they have a good upside potential from these levels.
Now, Gautam, you've been of the belief that the Nifty could touch levels of 6,900 to 7,000. Which are the key stocks you think will lead us to these levels?
So in terms of our overweight portfolio stance positioning, so we still maintain our overweight stance on three broad areas which is not linked to macro, local macro. One is telecom, second is media, third is specific oil and gas stocks. So that should continue to do well ex a local macro environment. The other element is IT services, on which we have a bullish stance because we not had a bullish stance based on currency, but on various factors including US recovery as well as visibility emerging in terms of growth rates beyond the cyclical recovery in the US. So we are getting more comfortable about long-term growth potential in the IT services space because this currency etc. is throwing also opportunity to expand their service area. And as growth visibility improves beyond the next 1 year of US recovery, those stocks can re-rate further from here or at least maintain current multiple. So IT services still remains the big overweight for us from a top-down perspective. So unless you see rupee going to 55 or 50 levels, which is not a base case, that sector should do well even with some currency appreciation. Apart from these private banks, that is another overweight for us. So that should do well. And then possibly select power stocks like Power Grid, NTPC, and as a contrarian bet even BHEL. These can do well in terms of driving the market up. We are neutral on rural focused consumer staples as well as on pharma and auto four-wheelers. Now these are more like market weights, but select individual names can do well. Now Tata Motors is no longer a top pick for us, but that should continue to do well next year. Similarly, among rural-focused consumer staples, the rural story is playing out reasonably well. And while it may not have a big impact for the overall Indian macro, specific companies and sectors which are exposed to rural India should benefit from that, including ITC, Dabur, etc. So these are the kind of names we are recommending investors to position for.
At identifying select stocks that you should be keeping on your radar, we go straight to our research team. Pranay Jain is standing by with the list. Pranay.
Well, analysts and DIIs are turning positive on mid-cap banks which haven't participated in the recent rally led by the lenders. So while you do have certain names such as Union Bank as well as Canara Bank which have jumped up nearly 12 to 15% over the last 3-4 sessions, on the other hand you have dealers which are recommending to buy Federal Bank as they're seeing strong accumulation by HNIs in this counter. In fact, the stock has shown the first meaningful rise after a consolidation in the range of 75 to 80 over the last 3 weeks, and dealers see an upside of nearly 10% in this counter in the near term. Another one is a small cap idea, which is Tamil Nadu Newsprint and Paper Limited. Now, analysts believe that the company is going to exhibit strong margin expansion going forward. Already in the second quarter, we had seen a 40% jump in the revenues, which was largely aided by 18% volume growth, as well as a strong rise in realizations. So while the company has exhibited strong performance in controlling the costs, whether it is pulp, chemicals, or lower fuel and power costs, along with the higher capacity utilization of 100% and couple that with the volume growth, and also if you consider that the cash flows are going to improve since the capex has just been completed, the strong performance is going to continue over the next few quarters. In fact, it touched a fresh 52-week high in trade today, and dealers see an upside of nearly 10 to 15% going forward as well.
Thanks for that, Pranay. Neeraj, very often, you have the flavor of the market and you give us stocks which tend to do well even from the trading perspective. So I give you a choice, a trading idea or a one-year investment idea, whichever it is, mid-cap space.
With the trading point of view, I think one stock which is recently recommended also, Hinduja Global Systems, which has been doing very well in the last quarter, results also very good. I think though the stock has moved a little bit, but I think even from the current level, there's a trading upside to this stock. And a second, of course, would be, though mid-cap should also start participating a lot, but then there are stocks in the large-cap space, good companies, which are still available at good value. They have good intrinsic value. I think I'll go for HPCL or BPCL from that basket. I think with a 1.5 years perspective, that stock still looks very attractive from these levels.
Sandeep, on the charts, what's it that looks encouraging to you?
Avan, I would go with a buy in a Sesa Sterlite. This is a 2 to 3 day time horizon. Stop loss of 187, target 207. A buy in Ambuja Cement, stop loss of 189, target 204.